Okay, good afternoon, everybody. I'm Pierre Roberge, the Daily Trader. We are now live. It is Sunday, March 5th at 3:05. I am a little bit late. Had some setting up problems. So, well, glad to be back. Glad to be back with you guys. It's been a while. It has been a week since I last did a video on the YouTube channel, so I was on vacation. I went to Los Angeles, spent the whole week there, and basically also went to Huntington Beach. It was not the warmest weather, but you know, it was spring break here in Canada, so the kids were on vacation. So this is why we decided to do that. Yes, if spring break would have been in March or April, that would have been better weather-wise. But on the plus side, there were not many tourists, so it was great. So it was a great thing, and I'm gonna publish. Maybe on my personal YouTube channel, I will publish a video I did. It's not the most professional video, but a video I did when I visited the Peterson Automobile Museum in Los Angeles, and they had a great section about Tesla. So I might maybe publish this on this channel because, you know, it's Tesla related, and we look at the Tesla stock every single day. So I might publish it here. But basically, this was a great, it was a good museum visit. It only cost like $20. But the Tesla section was quite significant, makes sense, and got to see in person the Tesla Model S prototype from 2009. I had seen it on TV, on YouTube and everything. Very nice. I think personally it's nicer than the Model S that we got in 2012, I think. Very, very, very nice car, and got to see the Semi in person, the first prototype of the Semi, and also got to see the Cybertruck also live. So for me, that was pretty interesting. Okay, but we are here to talk about technical analysis. So things did not move that much since I was away, so I guess I picked the perfect week. So let's recap a little bit, and as usual, you can leave me a comment right here, and I will read all of the comments and acknowledge them, and answer them if there is a question in them. This is public because this is the first Sunday of the month, so this video is public, so we might be seeing some new people here. Let me just I didn't check this beforehand, so let me just do a double check on YouTube to see if we see this. Just hang on a second. And I am streaming also on Twitch and on Twitter, so I'm trying those things at the same time. Okay, sorry about that. This is working. Okay, so let's look at that. Yeah, thank you for the comments. Okay, let me just go there. Health Fit. Well, yes, I'm trying to schedule my time a little bit better, so to give you a little bit more leeway to know when I am going to come on. It's usually between 3 and 4 anyway, or between 3 and 5, depending on how families go doing and everything. Thank you, Dave. Thank you, Captain Teach. Yes, I'm quite relaxed. As a matter of fact, I ate like we ate like pigs. The food was fantastic. If you ever are in the Huntington Beach area south of Los Angeles, this is maybe an hour south of Los Angeles, depending on traffic. You need to go eat at the Blue Gold. Uh, Fantastic restaurant. It's not a 5-star restaurant. They serve burgers and steaks and Brussels sprouts and things like that. But they have wonderful recipes. Everything. Their attention to detail is absolutely crazy. Everything tastes good. Even the bread roll at the beginning of the dinner. The bread rolls are amazing. Bread rolls. It's incredible. Hello, widow. First time we see you. Okay, let me see. Had Tesla bottomed to investors? Seems like an overreaction. Yes. Okay. Yes, we have a lot of stuff to talk about. So let's talk about technical analysis. So technical analysis is about looking at the patterns in the stock. We look at the patterns in the stock and we buy based on the patterns a stock does. We don't buy because there has been a good news or there has been a bad news. We sell because we know that first, how can I put this? There's a correlation between news and stock performance, but there's much more than that. There are many things that can make a stock move. And when we hear a specific news, well, this is great. It might be a positive news, but during the same day, we might also have come out 4 other pieces of news that are negative. So there's one big positive and four negative. So how can we interpret those news and how they will be perceived and how it will ultimately impact the behavior of the investors and the traders and the institutions and everything. So basing our investment or trading strategy based on fundamental analysis, fundamental, like, is the company doing great? Tesla is a great company fundamentally. It's great. Elon is super smart. Tesla is going to eat Toyota's lunch. I am convinced of that. I'm convinced that they will hit 20 million cars in 10 years. I'm convinced of all of that. But what I also know is that the stock price is very loosely tied to the health of Tesla. Because we know here from November 2021 to not too long ago, Tesla has been doing great. Great earnings, great earnings, great earnings, great earnings, great earnings, great earnings. So how many great earnings did we see where the stock did not really do much after? 1, 2, 3, 4. So that's 1 year. So for 1 year, Tesla has been doing better and better as a company, but the stock has been keeping going down. So if you invest based on the health of the company, well, I'm sorry to say, but you are buying high instead of buying low. So if you're buying high, you need to wait for the stock to get even higher and higher and higher to start getting in the profit. So we don't like to do that. We never buy a stock in a downtrend, and we wait for that downtrend to be over. And when the downtrend is over, that's one de-risking aspect that we like to have. So that's the minimum. If a stock is in a downtrend, don't buy it. If it gets out of the downtrend, then there's it's less bad to buy it. It's less bad. It's not necessarily super good, but it's less bad. So we have our way of doing it here. So and this is what happened right here. This is what happened right here. We were into a downtrend since September 2022. Downtrend. Broke outside of the downtrend. but without stochastic over 60, without my stochastic over 60, not any stochastic. If you use a regular stochastic, you might have seen a break over 60. My stochastic over 60, we did not get the confirmation with my stochastic, so even though we had a break, it was not a real break. And yes, this is exactly what happened. It continued down. Then it started to do a congestion zone, and breaking of the congestion zone was a second de-risking factor. So outside of a downtrend is one thing that we like to have. Breaking of a horizontal resistance, horizontal congestion, when it's going sideways, it's called a congestion. I'm sorry for the people that know this, but I am just introducing it to the new people, our vocabulary. Then congestion zone, and when we get outside of this with a good stochastic, with my good stochastic, then we can enter with more probability of things going up, and look at what happened. So we could have entered, well, depending on what you did. I don't tell people what to do, but I told you this is de-risked. And then boom, this is the swing that we are in. Okay, so now let's look at where we are at. So we have people that still have Tesla stock, and some people might have sold, and that's fine. We are not here to judge. We each have our own financial situation, and it's perfectly okay to sell after a little run up just to get some profit. It's perfectly fine to do that, and it's perfectly fine to stay in the stock while it's in a congestion zone. So okay, this is what happened. So we went up and we started a congestion zone. So when the stock is in a congestion zone, you can sell because we don't know what it is going to do. Nobody knows what it is going to do, and we don't know. But we are watching, and we know that we have some milestones that we have to look at. We had 187.41 as a milestone, and we have 214.30 as a milestone. Okay, so I'm sorry to say this, but what happened, is it Friday? I think on Thursday. So after Elon did the investor day, which was a great investor day, where Elon and his team said or told us how they would get to 20 million cars, and how they would be lowering the price of the cost of building cars, and also talked about a new generation car without telling us much about it, but we at least know that it is in the work. And also one slide that I thought was very interesting is the fact that Tesla has been reducing the cost of the Tesla Model 3 by 30%. So which car company lowers the cost of the cars they are producing by 30%? None. It does not happen. Tesla lowered it by 30%, and after that lower number, they might have been even profitable on that car from the get-go. So you are talking about a 30% drop in cost after that. So the investor day was fantastic, but the market is pretty crazy. So what happened on Thursday is that we opened lower than 187.41. We opened lower than that, but we closed above that. So this is why I should not say that I always say that, but I have said it before. Always wait for a full candle break before making a decision. So because we are in a congestion zone right here, if Tesla closes below 187.41, then we are perfectly legitimately allowed to sell it because the trend has changed. So the bull trend is right here. We have a bull trend right here. The bull trend got a little bit excited, getting away from this support line. It got a little bit excited. That's fine. It got a little bit excited. It got away from this support line. It got away. But what a stock tends to do is that when it tends to go away from a support line, it tends to come back. It goes away, it comes back. Goes away, it comes back. Goes away, you know. And this is what makes a channel. So this is exactly what happened here. So it went away and it just came back. It came back, and when it comes back, we are watching this very closely because as we don't like to buy a stock in a downtrend, we don't like to hold a stock when the uptrend is over and when the horizontal congestion that follows an uptrend is also over. Because this is how we can spot a change in trend. Technical analysis identify trends, and trends can be a downtrend, it can be a congestion zone, a horizontal trend, it can be an uptrend. We identify trends, and when there is a break in trend, we see it, and we jump in if we want to. We jump in. We don't jump the trend. We jump in the trend, and we just follow the new course or the new trend, the new flow. This is what we do. So how do we know when a trend has been broken? When we have a candle that closes outside of the trend. This is what we did not get on Thursday. Well, I mean, we did not get it on Thursday for the horizontal congestion zone. We did not get it. So nobody should have sold because they feared the trend was changing, because it did not change. It was awfully close, and it was very scary on Thursday because the stock opened below here. So on Thursday, if you looked at your stock and you say, oh, this is below 187, this is outside of this and outside of this, and where's the stochastic at? The stochastic might have been below 60 at the beginning of the day. So outside of this, no stochastic. These are the three criteria, but we needed to wait for the rest of the day to see if it was going to close above or not, and it closed above. So we are still inside the congestion zone. We are still inside of the congestion zone right here. So nothing else to do, nothing else to see. It's still part of the same pattern. So within this congestion zone, within any congestion zone, and within any bullish channel, within any bearish channel, there's randomness. That randomness, we look at it every day because I'm doing a video every single day. We look at it every day, but we don't act on it because this randomness within a channel is just noise. This is noise, goes up, goes down, goes up, goes down. There's a good news, it goes up. 2 hours later, there's a bad news, it goes down. And this is why we can focus on the signal and not the noise. The signal is when the stock price closes outside of the bullish trend, outside of the horizontal trend, outside of the downward trend. When it closes outside of that, this is signal to us. Should we get in or not? we can answer that question by ourselves, for ourselves. But basically, these are the milestone events. These are the signal events that we can act on. And that never happened on Thursday because we closed back above. So it took guts not to sell on Thursday. It took guts not to sell. It's okay to sell because, you made some profit assuming that you entered here. So you made this amount of profit. That's fine. But seeing what happened then, you could decide to enter back because it was maybe not the best decision to sell at that point if you thought this was going down, because we did not know until the end of the day. And at the end of the day, Thursday, we closed back in. So there was no reason to get out thinking that we had been under the congestion zone. So I'm explaining it. I am not being very succinct, but I hope I'm at least clear. And what's really funny is that on Friday, we got back into this bullish channel. We came out of it on Thursday. Even after the day on Thursday, the candle is still outside of this, but we got back in on Friday. So nothing to see here. Nothing to see here. It was a fluke. Whoops. So that's one of the things I wanted to say. Okay, second thing now. So 187 is still a very valid support. If we come below it next week, it's possible that we come back again outside of it and we do this. Everything's possible. It's possible that we break 214 and do this, and then we are going to need to check this line then. It's possible that we do this. If you are not in Tesla right now, wait a little bit that we break this before getting in, because it could be going up to 214 and coming back down, because this is what a congestion zone does. It zigzags between the two numbers, between 187.41 and 214.30. This is what it does. So if you are not in Tesla, yes, of course, you can enter right now. And nothing that I say is financial advice. I'm not a financial advisor. I'm just a guy in his house making money on Tesla, using technical analysis and not using and not relying on the news, which are deceptive. This is a subliminal thing I just did. So basically, if you're not in Tesla, wait after 214.30. If you are in and don't need the profit right now, you don't need the profit in your hands right now to do something with it, you can decide to stay, because there's no harm here yet. There is going to be harm if we close below 187.41. The only thing that's a little bit that we are going to have to watch is that we lost stochastic over 60. So we lost what we like to have. A stock, if you look at this here, a stock does not really move until stochastic is over 60. You can look at any stock. Pick any stock. Snow. Stochastic over 60. It was under 60 here. The stock did nothing. Stochastic became over 60. Then it started to do something. Yeah, sometimes it does a little bit of a move outside, but look at most of the move. It happens when stochastic is over 60. So this is, I should have different hats. I am now wearing my speculation hat. I never act on my speculations, but we are, I like to speculate a little bit. So we lost stochastic over 60. So we still need to check for 187.41. We still need to check for it. But I would prefer that stochastic would be over 60. That's it. Supports are more important than stochastic though. But this is just an indication a little bit. But the rest of the indicators are doing quite well. The MACD crossed bearish approximately here. That's fine. MACD crosses over and under as soon as a stock stops making a move. It did a move here and then it stopped. Then we are going to have a cross. That's fine. 187.41 as a support is still more important than MACD. RSI, which is another indicator that we are looking at, is still bullish, and DMI is also still bullish. So just check 187.41 and 214.30 next week. And this is what I do on this channel. I give you those numbers. I give you the important numbers, and the important numbers are not necessarily the round numbers. Oh, if Tesla is above 200, then it's going to mean something. No. In this case, sometimes a support or resistance might be at an even number, but it is not here. It is clearly not here, because look at 214.30. Boom, could not cross it. Boom, could not cross it. Cross it during the day, but came back down. And the same thing here. Exact match. Close. So these are the important numbers I want to. So this is my job. So my job here is to educate you on technical analysis and how you can use it not to enter in a stock when it's in a downtrend. I can educate you on the principles of technical analysis, and also I give you my take on where are the congestion zone, from which number to which number they are. And also for the bull trend and downtrend, I am here to identify those things for you so that you know if a downtrend is still intact or not. Voilà. So this is my job. And before I go to the comments, let me just look at the weekly chart, because this is what we do on the on this weekly live I do every single week. This week on Sunday, it's always on Sunday. This week on Sunday, I am doing it for the public, but usually what I am doing right now is only for my members. So you need to subscribe to my YouTube channel, and then you are going to see a join button. If you click there, and I have a special tier to get you access to this live every single week, where you can ask questions, you can make comments, and we can look at them. So let's look at the weekly chart. So this is what we are doing on Sunday, every Sunday. So the weekly chart gives us a broader look at the Tesla stock. And so it's basically the same concept, but because one candle equals 1 week, as opposed to the daily chart where one candle equals 1 day, we see different, we see a broader pattern. Bon, voilà. Okay, so let's look at the weekly chart. So we just got stochastic over 60, my stochastic over 60 on the weekly chart. So that's a good news, because you know on this channel, if you are following me, that if you want a good move on the daily, we need to have the weekly that's in agreement. So so we have an agreement right here. We have MACD, we have a crossover bullish for a MACD. This happened around October 9th. No, it happened, sorry, it happened where? It happened, okay, well, it happened, am I looking at the right thing? Oh, okay, well, it happened not too long ago. It happened January 30th. We have RSI that's green over 60, which is green. So this is good, and I'm gonna put the green thumb up just to indicate that it has met our criteria. And DMI is still bearish though. So DMI is still bearish. And looking at this weekly chart gives us a big overview of what things might be, well, what kind of things can be happening. And we can readily see here that we have a downward resistance right here, and we are in a congestion zone, and we seem to be getting outside of this very tight bullish channel. And you know, I can easily foresee that Tesla can be going sideways for a little bit of a while before deciding that it wants to break this here. So looking at this broad perspective, you know, I would not be surprised. I don't know if this is what is going to happen. I don't predict anything here. I don't predict anything. If Tesla closes above 214.30, this is bullish. That's it. That's all. I'm just saying, speculation wise, that I would not be surprised if we stay horizontal for a little bit of a while. Boom. Okay, so let me go to the comments. I think I answered that one. Super P are a my pronunciation of R. Well, just spent a week in the U.S. But R, you know, I thought you would have said the TH pronunciation got better. But R, I thought that my R's were great. But anyway, thank you. How can you join? Well, yeah, subscribe and then click join. Hello, Sunil. Okay, do you wait for an hourly or daily candle before making a decision after breaking? This depends on your outlook. If you want to invest in the stock market and, well, invest or trade, if you want to get into the stock market and you have a lot of time on your hand during the day, you can do so on the hourly chart. But if you play on the 1 hour chart, you need to look at your chart after each candle. So this is the rule. Look at your chart after each candle, because within the candle, we don't know where it is going to end. Oh, it's breaking this. Oh, no, it closes above. Ah, it did not break it. So while a candle is being drawn, it's of no use to us. When it is finished, then we can look at it and see if it broke a resistance, if it broke a support. So if you have enough time to look at the stock market every single hour, trade on the hourly chart. And you will have a lot more opportunity to get in and get out on the hourly chart than you will have on the daily chart, where you have to look only once a day. So only once a day, there might be a chance that you can make a move. So once a day is not very often. And you can use, you know, it's the same thing for the weekly chart. If you don't have much time and you only want to look at your chart once a week, trade on the weekly chart, or once a month. So it's the same principle, and yeah. So okay, let me get so what settings are your stochastic? Yeah, they are right here. It's a 21-day stochastic. So here are the settings. So this is what is making it work. You know, it's a 21-day. D is 3. The smoothing is 1. Because a 14-day stochastic is just too fast. And in terms of style, I am using upper band 100, lower band 60, and I'm using the color green. I should put it this green. So above 60 is green. So it's just easier to understand, and I am not showing the D. So in fact, it's not calculating that D because it's useless. We could use the D to smooth the stochastic, but I find that we don't really need to do that because we are using other ways to kind of smooth out little errors that might come out, or head fakes, that might come out, looking for a support, looking for the candle to be completely drawn. I think this helps a lot. So yeah. So basically, it's a 21-day stochastic, and that makes a difference. Okay, why has the lower support line of your channel only one touching point? If I draw one with 2 points, we are outside of the channel right now. Lower support line of your channel. So okay. Let me get rid of this. Lower support line of the channel, you mean? Well, which channel do you mean? Because on this horizontal one, we are touching 1, 2, 3 perfect touches. And on this one right here, we have 2. We have 2, and everything has been above. So you can write me another comment. Okay, sorry, yeah. So Captain Teach. Question: What happens if the congestion zone leaves the uptrend and just continuing? Is this bad or neutral? What happens if the congestion zone leaves the uptrend? Well, yes. So there multiple patterns can happen at the same time. So we have been in this congestion zone. It started on February 6th. And at the same time, we were in this bullish channel. So while we were in the congestion zone, right here, in this little thing here, I have the French word, but the English word I don't know. So when we were in this thing here, we were at the same time in a congestion zone and at the same time in a bullish channel. So it's more bullish to be in a bullish channel, even though we are in a congestion zone, than only being in a congestion zone. So as you say, if we get out of the bullish channel and remain in the congestion zone, this is less bullish. It's less bullish. So what a bullish channel tells us is that there's a move, there's a, how can I put it? There's a there's a herd that is galloping this way at this rate. So now the herd, well, it's still valid because of this Friday. But if we come outside of this bullish channel, then the herd is not going in that direction anymore at that speed. So it's a little bit less bullish. It does not mean it's going to come down. Well, it's less bullish. So how can I put this? We never know for sure what is going to, well, nobody knows what is going to happen in the stock market. Nobody knows. But what we are doing here is we are de-risking the moves. So as I said, if we buy when a stock is in a bearish channel, this is very risky. If the bearish channel is no longer there and we are in a congestion zone, it's less risky. If we get above the congestion zone, it's even less risky. And if we get stochastic over 60 at the same time, it's even less risky. So at that point, if you don't like risk, you have de-risked with 4 criteria. So that's pretty good. So if you are not happy with having de-risked 4 times, then maybe you should not be in the stock market, because everything is still risky. Even though we have de-risked a lot, it's never 0% risk. So the same thing with this here. So when we are inside a bullish channel, it is less risky to stay in or to buy in, because this is where the current goes. The current or the stream is going there. So you put a leaf on the river, it's going in that direction. So you put the leaf and it should go, because this is where the movement is. So I'm getting lost here. But if we get outside of this bullish channel, then there's one element of risk that has been added. That's it. So are you going to get your money out at that point? You can if you want to. So it just depends on the level of risk that you can tolerate. And so this, we can only look at the risk. This is more risky. This is a 3-star risk. This is a 1-star risk. That's it. And for some people, you need to have the 4 de-risking criteria in order to get into something. And for others, you only need 2, because you want to invest with a little bit less money and you don't care if you lose $1,000. So again, this is why I cannot tell you when to buy and when to sell, because I don't know how much you will be investing. I don't know what percentage of your net worth you are going to be investing. If you are investing a significant percentage of your net worth, then wait for a lot of de-risking. Myself, I don't like to I don't like to diversify. I don't like to diversify that much, because if you diversify, you will get a 5% return per month maybe. But if you concentrate and, well, if you trade or invest into just a few stocks that have a great move, this is when it's worth it for me. It's worth it in my opinion. Well, for me, this is worth it. So I put most of my eggs in a few baskets, but I watch those baskets. I watch them. Okay. So let me get rid of this and let me find to where yes, I will go over the S&P, VIX, and Dow Jones briefly. Yeah, thank you, Tesla Terra. ES1, I don't know what that is. ES1. Stochastic is still weak. Yes, stochastic is weak. So yeah, we need to know that. We need to know that because we need to pay attention to 187.41. It does not seem to be touching the lower wick on your chart on the second point exactly. It does not seem to be touching the lower wick on your chart. Oh, you mean here? It's touching pretty nice here. Boom, boom. Okay, okay, you mean here. Okay. Yes. Yeah, true. So I could have made it a little bit like this. Yeah. And then it would be outside. Yeah. So this is a good example. So, would it change things materially? So even though I was not perfectly like this, would it change things? Well, yeah, we can say right now that it's outside of the bullish channel. Personally, I still wait for a break of the congestion zone before getting out, because we could be going sideways here. So maybe I could be one day off. Yeah, but thank you for keeping me in check. Okay, so you were okay. If we fall out of the bullish channel next week, lose stochastic, but above 187, what we're being wait for something to. Yes, I would wait for a break of 187.41. So stocks move in, they how can I put this? When we are in a bullish channel, it is going like this. Then it's going to do this, and it could continue or go down. So I always wait for a break of a congestion zone to either get in or to get out. I always wait for a congestion zone, because stocks spend a significant amount of time going sideways after having done a move. So we have done a move here, and now we are going sideways. And if you want to keep the profit that you have, then you can sell after it comes out of this bullish channel. You can sell here, but it can continue. But you can say, okay, I'm gonna sell here, and I'm gonna wait to get back in if it crosses 214. So you can do that also and get in at 214 and above. You can do that. It's perfectly fine. You will have missed maybe a $15 move, because you could have come out at 198 and then get back in at 214. So you miss from 198 to 214. If it continues, you kind of missed that part. But if it comes down, then you are happy because you sold at 198 and not below 187. So these are different ways of doing it, and sometimes one is better than the other, and we never know when. We never know when in advance. Okay. So let me get rid of this. So thank you, Dave. So can you speak at what point would you short? Yes, well, I would short when we get out of this congestion zone right here. I would short here because we have stochastic under 60. So then I would short, and then I would try to, I can do this here too. This is pretty steep. I don't think it's gonna last a long time, but I would short, and then I would just watch that bearish channel. So the bearish channel might be here or something like that. And then I would watch it come down. And then where will it stop? I don't know exactly when it is going to stop. You can close the short whenever you want to, or you can wait for a congestion zone that is going to come at some point, and it comes back up, so you can sell at that point here. Well, you can get out of the short, you can buy back here after it has done a congestion zone, because this is always the same principle. It goes up, goes sideways, it goes down, it's going to go sideways, it's going to go up or down, and then it's going to go sideways, and then it's going to up and down, and then it's going to go sideways. So you can sell, well, you can close the position after it comes out of the diagonal channel, either a bullish channel or a bearish channel. So you can get out after it comes out of that, or here, or you can wait until it completes a congestion zone and it breaks in the opposite direction, and then you can get out there. So these are all different strategies, and I'm not telling you what to do. You pick the one you want. Okay, let me, does stochastic matter if the stock is in a congestion zone? Last week, Tesla hourly stochastic went below, while Tesla hourly and daily stochastic went below while in the current congestion zone. No, the support is more important than stochastic. Thank you, Timmy. Thank you, Captain Teach. ES1. Okay. Okay. It's not that gappy. Okay, yeah. Let's look at the VIX, S&P, and Dow Jones, and how am I doing for time? Okay, it's not too bad. What's your thought? Okay. So, okay, let's look at the VIX. So VIX is an indicator, a volatility indicator on the S&P 500. And when the VIX comes down, the stock market tends to go up. And look at this thing here. We are going down. And especially the last 2 days, so Thursday and Friday, big move down for the VIX, and the VIX was trending up. You know, the stochastic on the VIX was trending up. So the VIX was gaining strength. It was gaining strength, and now it broke that little bit of a trend. And see the same trend here, making higher lows and higher lows, higher lows and higher lows. Boom, it's breaking that. So this is good news. The little bit of an uptrend that VIX was in is over. So the stock market will tend to be more bullish. So that's another thing that we are looking at. And if we look at the weekly chart on the VIX, let me get rid of this. So weekly chart on the VIX, yeah. So see, stochastic is still under 60 for the VIX. Is everything, something does not look right. Okay, no, it's right. So stochastic on the VIX, on the weekly VIX, is still quite low. So for me, I am, so the stock market is still bullish. There's still bullishness in the stock market because I see this on the weekly chart, and also on that daily chart. So if we look at Dow Jones, look, boom, it's bouncing. It's bouncing. So Dow Jones is in a congestion zone. So it went up since October. Boom, big move up, and now this is a big congestion zone. You know, it can be big. It can be big, but it's there. It's there, and it's basically going sideways. Sometimes it goes up for a couple of days, a week, and then comes down and then goes up. And here we have a very small congestion zone right here, came down. And here, you know, sometimes when we are in a congestion zone, the stock makes it a little bit bigger. So this was the original, you know, congestion zone here. You know, see, we stayed here for over a week at this point here. Yes, we came outside of it, but this could have been seen as just a fluke. And then it stayed here. But now when it's going outside a few times, then this is what I call a double support. So I draw this thing right here because the stock has told us, or this index has told us, that it is not respecting this one as much as this other one right here. The stock, you know, we are just listening to what's happening. You know, we should not try to impose our vision on what's happening. What is happening is what should be driving. So this is the overall congestion zone right here. And sometimes, and this is why I call it a double support, because sometimes it's gonna stop at the first one. You know, maybe I'm gonna use this one here, and sometimes it's gonna stop at the first one, and sometimes it's gonna stop at the second one. So it sucks when it happens. And it's too bad. But technical analysis is not 100% perfect in terms of, well, okay, yeah, you could have sold here. It's too bad. You could have sold here because it was below 60, and this is where we thought it was, and then it started to go back up. So we sometimes make mistakes like this. We sometimes do, and you know, it's not perfect. I wish it was perfect. You know, I'm kind of a perfectionist, so I hate it when I see this, but I cannot do anything about that. But we are never going to do worse than people that, and I'm sorry if some of you are in that category, but we are never going to do worse than people that buy Tesla here after earnings because they believe in the company and they keep the stock until it comes here. We are never going to do that, because here we would never have bought Tesla because we were in the downtrend. We could have bought here outside of the downtrend, but we never are going to buy in a downtrend. And that alone, this is so simple, but that alone is going to save you some money, is going to save you some paper loss. Paper loss, yes, it's paper loss, but in my opinion, it's still a big missed opportunity. Okay, so where were we? We were on Dow Jones. So Dow Jones is continuing sideways. So it's going sideways, and if it breaks this one right here, then I would not, I would start thinking about shorting if you want to. So at 32,550. And if we look at the weekly chart, so look at this, the weekly chart is over 60. The stochastic is over 60 on the weekly chart. So there is still a lot of strength right here for Dow Jones. So the index, the Dow Jones Industrial Average Index is still, well, it has strength in it. It was bullish here. It broke outside of a downward channel. It's not going sideways. This is looking good. We hope it breaks this too, because this is the congestion zone after the downward channel. So we are waiting for this to have a better indication that the stock market is going bullish. Okay. And let's look at Nasdaq. So Nasdaq, yeah, this was the bullish channel here, and we came outside of it, but now we are back in after these great 2 days. Stochastic is not yet over 60, so again, we should be careful about this. We need stochastic over 60 to really continue like this in the congestion zone, in the bullish channel. And weekly chart, it's still good. Weekly chart, we still have stochastic over 60. So the weekly chart has given permission to the daily to go higher. This is how I'm going to express it. And Nasdaq, I might have said the Nasdaq instead of S&P. So Nasdaq. Okay, Nasdaq is we don't have stochastic yet. It had started a little downward channel, broke outside of it, but no stochastic. So that break is not to be believed as much. It's not to be believed. it needs to stay above, and in order to, well, it needs to stay above 11,565 for a little bit of a while, so that stochastic can be convinced that this is really a break of this downward channel. And ES1, okay, that's the mini future. Isn't it the same as SPX? It looks pretty much the same, huh? Yeah, so it's the same thing. Okay, my pleasure, John Lee. MR2, nice car. I like it. You seem to have the first year. Thank you. So thank you, guys. This is going to be it for this today. Let me say something. I discovered, okay, I've told you what I think about fundamental analysis. We should not base our trading on fundamental analysis, because it does not cause the stock market move all the time. Sometimes it might do. But I found this great guy on YouTube or somewhere, I think on TV, yeah. And this guy is he was the number one fund expert, I don't know, something like that. And I've been listening to him, and he won't tell me when to buy or sell, but what he says, he is looking at the overall trend, the trend in the economy. And what he said, so I won't say it here because I'm busting one hour, but join me Monday. I'm gonna do a video. Well, every single day of the week I do a video where I talk about Tesla, the VIX, the Dow Jones, S&P 500, and also Nasdaq. I talk about all of those in one video. So I publish this at around 5 p.m. And I'm gonna talk about this guy, and I'm gonna introduce you to this guy. And as a teaser, we have been hearing that the stock market is going to crash. It's going to crash, because we are raising interest rates and everything. And I had a hard time reconciliating that narrative, which we don't see much. We don't see that narrative yet, because we are outside of a downtrend for Dow Jones and for S&P also and everything. We are coming out of 1 year of downtrend. So where is the big recession that everybody's talking about? Of course, we are going to see it here in our charts. We are going to see it the day it happens, with our stochastic and with our break in support. We are going to see it. But this guy explains why we don't see it yet. That's very interesting. Voilà. So thank you very much, guys. So thank you for interacting with me like this. So I always enjoy this. So I hope you are getting some value out of this, and this is helping me, because it's getting stuff out of my head, and this is always helpful. So thank you guys for joining. You can watch me every single day of the week. What is my channel name? The Daily Trader. I do a video, it's free, and then I have a member channel. You can become a member of my channel to get some additional perks. I'm gonna have to answer Monday, Dave. Monday, you'll get the answer. So you can join me. Please join, subscribe, and I'm gonna wish you a great rest of the weekend. And I'm gonna tell you what. I'm gonna tell you à la prochaine.